health crisis, an economic catastrophe, and a golden opportunity. Fairly self-explanatory. Maybe I could just end there. It's a fairly self-explanatory slide. There we go. I've actually changed. I've done quite a few presentations in the last few months. It's been a very busy quarantine period. I redid this one. I made this up completely in the last day because things have changed a lot in the last 2 weeks. From my perspective, we are in a situation where we are in a gold market. It's going. And as opposed to a few weeks ago when there was still so many questions swirling around that there was still too much uncertainty to know for sure that we had gold on our side. Now, I think we're in that boat firmly. And the reason is that pretty much every force that you can have supporting gold is aligned in that direction right now. So that's what I'm going to spend the first few slides here talking about. All the forces that impact gold and how they are all supporting the yellow metal right now, and doing that even more so than they did before COVID hit. So the most important pro-gold force is always negative real interest rates, and we are very firmly in that camp. If we look at the US 10-year, it's currently yielding 0.6. If you take inflation away from that, you end up paying over 1% to own US debt right now. That means that safe trade, that yield paying, secure store of wealth doesn't work. And always when real rates turn negative, that is when gold performs, because it is the alternate to that trade that isn't working. So we clearly have very negative real rates, and that's not going to change anytime soon. Can you imagine a central bank anywhere raising interest rates right now? Right? So that's not going to happen. There's lots of questions down the road about what's going to happen with inflation, deflation, and whatnot. But at least in the near term and in the medium term, I would also posit we are going to be in a negative real rate environment, and that is the most important force for gold. Secondly, we have unprecedented levels of money printing by central banks around the world. I mean, the Federal Reserve has basically nationalized all of the markets except for equities. They're buying everything in sight. They're the buyer of last resort for everything. There are all kinds of questions about what the overall impacts and the long-term impacts of that will be. Like I said, inflation, deflation, there are almost equal numbers of people arguing on either side of that. But what we do know is that mega money printing is good for gold. So that's the second pro-gold force. Then there's overall uncertainty, which permeates just about everything right now. What are the stock markets going to do? How bad is economic growth going to get? What shape is the rebound going to take? How many businesses are going to get taken down by this situation? What's going to happen to currencies? The politics are being upended in various ways, global supply chains. Obviously, immense uncertainty. Gold gets bought in times of uncertainty, so that's really helpful. You can see that. One example of that would be the record buying in gold ETFs that we saw in the first quarter. Continuing along, I would say that all through this stock bull market, which has gone on for many years now, buying the dip has worked really well for investors. And we've had a very long bull market, so investors have made a lot of money. That means there's lots of money that wants to buy into this dip. I mean, it's clearly more than a dip. It's more dramatic than a dip. But there's a lot of money that wants to position to profit from this. I think it helps that the great financial crisis was not that long ago. Investors that bought into that crash did very well. Investors that bought into the late 2018 correction did very well. So that mentality is very established. There's lots of money that wants to position to profit out of this. But this time is pretty different. This is unprecedented on almost every level. And so there's a lot of investors out there who aren't just buying back into the market. There's lots who are, but there's also lots who are looking for value and looking to be more tactical in their positioning to profit. And those investors, almost as a whole, will know that gold rises first out of crises. These two charts, I think Scotiabank put these together. shows the late 2018 correction, shows the global financial crisis. Red is gold rising first, clearly out of those crises. So that plays in gold's favor, is playing in gold's favor right now. Then I would say this is the generalist argument, generalist money argument that I'm going to spend a few moments on here. In general, big pools of money, fund managers, they haven't really had to look for value for years. I mean, funds are all about just beating the benchmark, so they've pretty much just bought the market. They've just buy the index, have one or two trades that inches you above that benchmark, and that's what a fund has been trying to do for a long time. Now, in the midst of this crisis, when things get overturned, investors expect more from their funds than just mimicking the crash and the bounce. They want more. Fund managers are expected to either have foreseen it or to profit from it. So they have to look for value. And when they do that, gold miners stand out across all equities for their financial strength. When you put together the cost cutting and financial prudence that were a result of that terrible bear market, you add in this strong gold price that we have right now, what you get are that gold miners have some of the best balance sheets and earnings around. So even for investors who don't put much confidence into a gold bull market, like a gold price bull market argument, they can look around and just do number crunching and see that gold stocks make sense. Gold stocks stand out. This table just shows, this is a Schwab outlook for earnings growth across sectors over the next year. The numbers for almost all sectors are atrocious. But if you look back last year, gold miners had almost 50% earnings growth, positive 50% earnings growth, and the gold price keeps getting stronger. So sure, COVID is going to pull things back a little bit from mine closures and whatnot, but still, gold miners are going to have some of the best earnings around, and that we're in a condition now where that actually matters. So these are all forces that are compelling generalists to buy into our space. And I emphasize this because I know that I've been saying for years that what we need are generalists to move in. The dedicated gold investors know that the setup makes sense, but what we need is real money, bigger money to come in and fuel a bull market. And that is happening. So, in conversation, I understand that the head of Fidelity has the largest mutual fund in the world, the Contra Fund. The head of Fidelity had a call to those fund managers and he was incredibly bullish on gold. Now, if a small percentage of a $150 billion fund gets allocated towards gold, that has an outsized impact on our small sector, right? That's why generalist dollars matter, and it is happening. These are just charts of Newmont and Barrick, right? Not only did they recover from their COVID crash lows, they have jumped to multi-year highs, levels that they haven't traded at since 2012. Moves of that scale, that doesn't come from gold investors just buying themselves. That comes because generalist money is moving in. Generalists were sniffing around. They were interested in gold before COVID, but now they're actually buying. And these inflows will continue for a long time. This is an important point. For one thing, it takes a long time to invest billions of dollars, especially into a small space like we have. So it just simply takes time to put the money in. And then you get that, the opposite of a vicious cycle, you get a good momentum cycle where as these inflows keep moving in, then you get more price performance in the gold space, then that attracts more inflows. That's a gold market creating its own momentum. So this momentum is here from generalists, and I suggest that it is going to stay with us for quite some time. Okay, so if I'm super bullish on gold, which I am, what should we do about it? As I just said, majors are up already really nicely, but they will keep rising for the reasons that I just said. Big money requires big liquidity, big market caps, defined metrics. They can only buy majors and royalty companies. So they will continue to pour their money into that space. So major miners work. We can see that focused gold investors have already rotated down into developers and advanced assets. So one of the charts I have here is Marathon Gold. It has rebounded completely from its COVID low, and I think that's because it stands out as one of those advanced assets that gives you 3 ways to win in a gold bull market. And I would say that's clearly defined value growth as they just march this Valentine Lake project towards production. You get optionality on a large resource in the ground, and you have definite potential for merger and acquisition activity. The majors need assets like this. There's not that many of them out there. So these developers and advanced assets are going to get a lot more attention, and they're certainly already getting attention from engaged gold investors. One of the points that I mentioned in that list was optionality. Optionality deserves its own category as well. And the reason is that as a gold bull market develops, the amount of value that the market gives per ounce in the ground really rockets up. So big ounce counts work. The chart I have here is Northern Dynasty from 2003 through the last bull market. It went from what, $1 to $8 or something like that. I think as high as $18 at one point. And yes, they were doing work as well and creating and developing their deposit. But really what was going on there was they had a really, really large deposit, and the market was giving them a higher and higher multiple on the number of ounces that they had in the ground. So if you can find big deposits, they're going to rise in value significantly. They're going to offer you great leverage during a gold bull market. Right now, one tactic that I like is look for ones that are actually fairly low grade. I don't love that approach sort of intrinsically because I want the best of the best, but the lower grade deposits don't yet look economic, but they're going to look great when gold just inches a little bit higher and a little bit higher. And so they offer the biggest upside. They're not getting attention yet. They're not getting huge buying yet, but they will get tons of buying once gold gets a little bit higher. So large lower grade assets provide a pretty awesome opportunity for upside in a strong bull market. Okay, then what about how to play explorers? I've been thinking about this a lot, and here's some of the ideas that I have around what to do in the exploration space. First of all, I think you need to really focus on companies that can be active in the next 6 months, call it, in this COVID world. And the reason there is that COVID is making exploration hard. It's making it expensive. It's making it less efficient. In some places, it's making it actually impossible. And the result of that is that I think we're going to have a bit of a shortage of exploration news just when investors are starting to pay attention and want exploration news. So if you can find, I think it's important to focus on companies that are going to be able to drill strong targets now or in the near term, ones that can find functionality in the COVID world. Because I think just being active and having news flow is going to be a major differentiator amongst explorers. I do think that investors are going to they're going to gravitate first to low risk jurisdictions, new or exciting discoveries, and simple deposits. That's just how the pattern goes. Later in the market, they'll absolutely go for higher risk jurisdictions. They will go for things like old projects that need a whole bunch more work or more complicated deposits. But to start with, low risk jurisdictions, new and exciting discoveries, or ones that are advancing in interesting ways, and simple deposits. I would say be very careful of management that's having any trouble raising money right now. It's different if management is hesitant to raise money when their price is still weak. That's capital markets management. That's okay. But if they're actually having trouble finding money, money's available for gold exploration, for silver exploration. So if they're a precious metal explorer and they can't raise money, that I would say is a warning flag for that company and management team. Speaking of raising money, there are good explorers that need to raise money right now so as to not miss the season. That goes right back to the first point on this page, right? They know they need to be active in the next 6 months to catch this market. And so there are financings happening right now. If you participate in financings, I would say pay attention. A lot of them are happening quite quickly. A lot of them are quite small because companies just want to raise a little bit of money to get going and then hopefully raise again later when their share price is stronger. But there are some good financing opportunities out there. Broaden your list. For years, as this bull market got going, I really counseled only buying the best of the best. And to steal a line from Rick Rule, I think it's now time to consider also the best of the rest. This market looks really robust and exciting to me. And if you limit yourself to only the stocks that you think are the very best of the best of the best, you might be limiting your ability to profit, because this rising tide effect is really going to come into play in the next while. And so there's going to be stocks out there that you wish you hadn't discounted if you only consider the very best of the best of the best. And sort of tied to that, I have lots of subscribers asking me questions about dogs in their portfolio, things that they didn't sell before the crash, that haven't bounced. What do I do? I really think we're entering a strong gold bull market. I think that in most cases, it probably makes sense to just hold on to those dogs right now because the rising tide will probably float them in the next little while. Obviously, that depends on capital, access to capital and whatnot, but that's sort of a general comment there. I'm almost done. The last thing I want to do is pay a little attention to uranium, which is the other. I mean, I didn't talk about silver only because I don't have that much time. Silver certainly tracks a gold bull market and is just as important to position in these days. But on a slightly different note, uranium is heating up in a very real way. And that's for two reasons. The fundamentals have been strengthening for 3 years as global producers worked together to cut production, to reduce the excess supply that was out there, to tighten the market. That's been going and strengthening the platform. And then COVID came along, and about 30% of supply is now suspended because of COVID. And that's sort of the spark that has lit things in the last little bit. So uranium is really starting to move. What's important from the chart in the upper corner here, the price chart, is that yes, uranium has moved from $24 to $32 a pound in the spot market. That's a big move, no doubt. But a uranium market, when it goes absolutely wild. And so there's a huge amount of room left. When this happens, I don't know why I'm quoting Rick Rule so much. I don't usually do, but I remember one of his famous lines about uranium stocks is that the worst performers in the uranium space in the last bull market gained 800%. The best obviously gained thousands of percent. So uranium markets are crazy. This one has been setting up for a long time. COVID suspensions have brought it forward, made the need for new supply more apparent. And people are starting to pay attention. Can the bull market really get established in the midst of all the COVID uncertainty? That is a question that I don't know the answer to, but I have confidence now to say that we are going to get a uranium bull market starting to climb sort of in the next year as COVID impacts become more apparent, become clearer, and these supply cuts. Cameco isn't putting Cigar Lake back online probably until spot prices make sense. So I really think we're going to get a pretty interesting uranium market here. That's what I have to say. This is who I am and what I do. I publish 3 newsletters. One is a weekly about most of my portfolio and what I think is happening in the market and why it's important. I have a monthly newsletter for those who are newer to the metals and mining space and want more introductory level explanations and low risk investment ideas. And I have a premium service for those who are interested in participating in private placements when I find ones that I like.